Welcome traders, welcome back. My name is Adam, Chief Market Analyst, and this is for the week. This is my market analysis for the week commencing September. Wow, Monday, 9th of September. So what is really the big stuff I want to pay attention to? So first of all, remember that the US economy is doing fine, and it's likely to continue doing fine, I think, so long as the current administration policies are enacted. Really the key thing, by the way, and if whether you don't believe me or not, go ahead and read Ray Dalio stuff. There's some incredible economy stuff that you want a strong middle class. So when you start not taxing the rich and all the wealth just basically works its way up to the 1%, then pretty much your economy is screwed. So what you want is an economy where if anything, you're giving tax breaks to the lower and middle classes and making sure that the top 1% pay their fair share. So my point is this: the US economy currently is doing incredibly well. Inflation appears to be under control. I'm going to be looking for CPI data just out of curiosity. I want to have a look and see how the UK is doing. GDP. Then we have the Euro side of things. So what's going to happen with the interest rate decisions over there? Are we going to see any changes? And PPI data out of the US. Pretty much most of this, I don't expect any real changes to it. Let's have a look at the charts because there are some technical potential events this week, and of course they could be triggered by these economic events. Okay, so let's start off with the VIX. I'm excited. We're seeing a little bit of a spike over here. It makes sense because do you know which month we're in? September. What's significant about September? September is historically an incredibly bearish month. So we're seeing a spike in the VIX, which absolutely makes sense when we go across the rest of the charts. I don't expect it to go too far. We'll see how it goes. We're not actually through the worst of it yet. I expect it to get worse as we head towards the back end of the month. So we've still got a few more weeks, and therefore we could see further spikes to the upside there. We're definitely going to see money moving hands and some people profit taking within the markets. Have a look at the dollar index here. So I just want to draw your attention to this. This is not a really strong finish on Friday, but it is definitely a potential double bottom. We've got bullish divergence. Actually, it's just bullish convergence because they're equal highs and lows. But this could potentially lead to a turnaround. Really, when you look at it here on the weekly time frame, you can see we're at the bottom of the range. I've been talking about this for a while. The dollar is inherently weak. If we do get rate cuts, we'll see a weaker dollar, but it is at the bottom of the range, and therefore I don't want you to be surprised if we find that it bounces back from here and works its way back up to the top. Having said that, it looks 60-40 as though we're going to continue to get a weaker dollar. The only thing I wanted to point out here, though, was that Friday we did see a little bit of a rejection there, and therefore we could see a stronger dollar coming this week. So what am I going to be looking for? A break of this low over here and a break of this high. In fact, just for fun, let's kind of put in a little bit of a level here. Let's just mark it. If I get a little bit of a break of this low, what's going to happen this coming week, and a little bit of a break of this high, and just see how that ultimately plays out, which way we get that. So I'll be looking for that. Let's move on to the euro dollar. So euro dollar, you can see actually looks very much as though we had a previous week of rejection, so move up, move down, but at the same time we've come back into this, we've broken out of the range, come back into this level of resistance. We've produced a slightly green candle at a level of support near the moving averages. So again, no difference from that dollar index. I'm looking to see if we get a break of the low or the high here. You know, something crazy could happen. We could see a break of the low throughout the early part of the week and then finishing up higher by the end of the week. That could happen. You can see we've got an outside candle here. There is definitely some decision that is going to have to be made this week, whether we head lower or higher. Having a look then at cable. So cable finished with a very bearish engulfing candle. Again, didn't close really near the lows, but you can see it's battling here at the top of the range. It is overextended. It is due for a little bit of a correction. I'd be interested to see if we get a break of the low here and then find ourselves heading back down to 1.3 for cable. Aussie dollar, US dollar. You can see that clear rejection of the range, so therefore move lower here, which again would depend on a stronger dollar, would make quite a bit of sense. Kiwi dollar. Here, coming back down to test this level of support, very similar to cable. We could find it finishes with a bullish rejection, but a move down, at least in the initial part of the week, actually makes sense. Then we have a look at dollar yen. So dollar yen, remember that my expectation for now, we can remove this blue box because it's not going to turn around now. My expectation now is that it will continue to head lower. So trading opportunities for traders will be looking for any kind of pullbacks into these market structures and then looking for short continuations. Dollar Swissy, also here starting to slow down a bit. I want you to just see how it is starting to double bottom here. Looking a little bit more bullish here. Dollar Swissy looks as though it's going to attempt to find, I'm just going to copy this, it's going to attempt to find some form of surface or support here, I beg your pardon, and we'll see if that's going to be the case. Then we have a look at dollar CAD. Dollar CAD still range bound. It's had a move down. It's potentially going to work its way back up here to resistance. So same thing again here. Very strong bullish engulfing candle. How could it play out this week? We could see a move up towards 1.36, 1.3650, and then a continuation to the downside. Moving on to commodities, gold. So what's happening with gold? It is overextended on the monthly. If you recall, I've been saying this for a while, but the weekly and the daily were not looking that bad, but it is definitely encountering some very strong resistance at the sort of 2525 area. Let's call it 2525 area, and therefore a little bit of a pullback into the moving averages actually makes quite a bit of sense. I'd like to see that kind of happen. So we could see gold this week heading back down towards 2450 area. Let's have a look at silver and compare it. Silver looking very different. So silver's looking quite bearish. From a monthly perspective, it just very much looks as though it could continue to head down and is not managing to break to the upside there. So that means also, again, that hints at a slightly stronger US dollar. Let's see if that ultimately plays out that way. Now let's look at light crude and West Texas. We've broken through this key level. This is significant, guys. We've broken through this upward sloping trend line. Yes, this hints at a continuation to the downside. The real question for me is going to be, where is it going to find its next level of support? My next level of support is sitting at approximately, let's call it 62.50 over here. And so it would make sense to me, again, this week, if there are any potential pullbacks, there could be some good shorting opportunities. $70 is a really nice round number, so that makes sense. Let's have a look at West Texas. West Texas also here heading back down towards that 65.80, 65.75 level makes the most sense. Any kind of pullbacks for me would be shorting opportunities. So crude oil looking weaker. Let's move on to the global indices, and let's have a look at what's going on here. So it is a beautiful double top. So last week I said both things. I said that September, I'm not convinced that we're free and clear of September. Believe it or not, I did some research into it, and I wasn't aware of this thing. I was aware that Septembers are historically bearish months. I wasn't aware that it often starts in the second week of September. So I can't really remember where I discovered that this last week, but as it turns out, we spoke about this last week. Are we free and clear? We looked really nice and bullish, but are we free and clear? As it turned out, as bullish as we did look, we have had that September correction so far appears to be coming in, and therefore, because of that, I'm pretty happy to continue to look for a further downside correction, at least this week. It makes a lot of sense. A lot of people at higher levels with larger amounts of money are probably looking at profit taking. So it could be one of those cause and effect type of situations. S&P as well, really strong double top. I expect the markets to potentially head lower this week. The NASDAQ, interesting, looking a little bit more like a head and shoulders pattern that could form. I'm not sure if that's going to happen just yet, but I am going to mark it. Let's mark a head and shoulders pattern. You should know that head and shoulders patterns have an incredibly high rate of success once they're triggered. So for that to be the case, and I am not convinced we are there yet. If we were there, we would see let's copy that as well. We would see, when it breaks that level, we would see a much deeper correction. And I want us to just kind of remain calm and not assume that that's going to be the case. All right. So that means that we would see a move down. Right down here is very unlikely. I don't expect that to be the case. So I think what is more likely to be the case is they will come back and test this level of support at its extremes. This is a really good area where I'd expect the markets to turn around. So therefore, for me, plan A, expectation A, is the green box becomes the area where we ultimately correct down to, and at the same time also find support. Let's move on to the Russell 2000, back into the range. Nothing huge here. In fact, it could be breaking out and testing it for support now. So we could even finish up with a bullish candle over the coming week. FTSE as well. Also, I just expect this to come down at this time back into these levels. That's my plan A expectation. The DAX as well. Also expecting this just to come back down into the green box. Not looking for a bigger correction than that. As I said, my expectation for now is that, believe it or not, although a lot of the media would have you convinced that it is a complete shoo-in for Donald Trump, I want to remind you that he was kicked out after 4 years and he was ranked as the worst president in history. Those two things are unavoidable facts. And so therefore, I want you to consider the fact that not only has the economy been incredible the last 4 years, much more stable, politically stable as well, it is just statistically far more likely that the Democrats are going to win this coming election, which is about 60 days away. So for me, my expectation is that unless there's an actual physical coup, my expectation is that we will see that Kamala Harris is going to be the next president of the United States, which means that the policies that are currently in place are likely to stay that way, and therefore the markets will remain bullish. We are in a bull market, and therefore I expect the markets to maintain that bullishness. Therefore, I think it is reasonable that between now and November, the market will likely have a strong correction and then start to strengthen as it works its way towards Christmas. There we go. That is my 2 cents, and let's move on and have a look at the Nikkei, and then we'll move on to equities of interest. So the Nikkei having a bit of a correction here. Again, we've got a bit of a lower high here on the weekly, but this green box for me and this area of support, I think those are likely to stay intact. Now, let's move on and have a look at equities of interest. Okay, so starting off with Bud. Bud continues to build towards the breakout. We had another attempt at a breakout this week. We spoke about there being a daily breakout pattern setting up here and a monthly breakout pattern. Just interesting, doesn't happen very often. Then we've got Apple. Apple starting to produce here a lower high, but also potentially looking for a bit of a correction to the downside. Not looking to see that much. However, I would say it'll be interesting to me if we get a big drop. In other words, that there's fear and panic. Of course, I expect the media to make big sandwich out of it. We'll see. But looking to see how that is. Now we've got Amazon also starting with a lower high here. And again here, I still think that we could have a feasible correction back down towards that 150 level. Let's see how that ultimately plays out. Okay, excuse me, my dog wants my attention. So very overextended, AT&T over here, but just overall, I like the look of it. It's coming up into these previous highs here, so we might as well just give ourselves another level there. So let's just go ahead and just put that up at these old highs here. So yeah, it might continue to push up. It's been performing really well, but we might also see a bit of a rejection forming over there this week. Moving on to ARK. So interesting to me. I think if you've been following my episodes, you'll know that my expectation here is probably you could anticipate I'm expected to just head back down to the bottom of the range. What's up? No, she just wants my attention. Okay, and again, we had a much lower high here. So yeah, we could see ASML continue to break through the support level, and we'll see how that plays out. And Glencore. So Glencore breaking down the bottom of it, and again back down towards the sort of 360 level makes a lot more sense to me. And then we'll see how it handles that level. Tesco also just on fire, like really on fire. So, I used to kind of dismiss UK stocks, but there's plenty of UK stocks that have been performing really, really well one day. Performing really well these days, and Tesco is one of those that's just been killing it. And in fact, so have a few of the other big sort of shops, food shops and stuff like that. So we've got Amex doing a bit of a correction back down here. I've spoken in the past about this bearish divergence. It continues to kind of stay here, but I think again a correction back down to 220 makes a lot of sense there. Berkshire Hathaway also just nicely overextended here. Doesn't have to do much, back down to 440 before continuing onwards. We've got Coca-Cola also again here, bit of a move down. Let's mark this just for fun. Let's see where we ultimately pull back to and see if it ends up finding its base in this area. You can see a correction here back down to 65, a little bit overextended there, and so we might see that it comes back down to the previous highs over here. So that also looking good. BP, so there we go, breaking so far at the bottom of its range. So I think we can get rid of this. We don't need the danger zone there. We could see this break outside of the bottom of its range. Exxon was generally a little bit stronger, couldn't break out of its range, still stuck within that, so I would expect that to head lower. We've got Estee Lauder is definitely not going to be turning around anytime soon, so that will continue to head lower. We've got General Motors. This is almost a triple top. We've got that reaction there, then a visual double top here. And so, yes, I would expect a deeper correction. So also looking a little bit more bearish there. General Motors, again, you can see that this is clearly an industry-wide type of behavior. Sorry, that was General Motors, not Estee Lauder. JP Morgan Chase, very nice correction over here. It's been performing relatively well, and all I would expect here is possibly a little bit of a deeper correction. I'd move it up to about there and see. We'll see if that is. If it comes back down to that 50-period moving average, that would be a very nice correction. We've got QQQ again producing a lower high, so this is almost, again, very similar to a bit of a head and shoulders pattern. Let's see if that plays out. It could play out. That's what head and shoulders pattern is, and if it did do it, where would it go to? Where would we see that correction? Excuse me, that's not exactly accurate, that one, but it'll kind of see where it is. We could see a move back down to that 350 level. Let's see how it plays out. That is just a hypothetical. I'd be surprised, but we deal with potential opportunities here. Still got the megaphone pattern with Adidas, still stuck in a range basically on the monthly. You can see it here. In fact, people would argue this is a diamond pattern. You've got higher highs here, lower lows there. Then if we get higher lows here and lower highs, you get this diamond pattern, which could then lead to a breakout to the upside. We've got Meta staying within its range, also, bumping its head up there. That makes sense. We're going to see that head lower again. Morgan Stanley, again, almost a potential, just another double top here kind of pattern, and also pulling back a little bit into the moving averages. You can see there's just very much a consistent pattern here. Okay, so NVIDIA also. Okay, so I'm going to spend a little bit more time on NVIDIA for you. So here we have been overdue for a correction for a while. So where am I looking at the potential for this? Let's remove all of these and just spend a moment for me to just to clear everything on here. So let's just on this chart study, let's start from scratch. So we've got a big, strong resistance level at the highs over here. We've got a previous high sitting down over here. We've got a level of support resistance that we've had at this period. You'll see it's a little bit more obvious when we go down to that sort of weekly. Here we could see, excuse me, so I'll just adjust that. So here we could see that level of support. And again, if we copy it, we've got a level of resistance and support over here. So those are our major levels. But what I would like to draw your attention to would be Fibonacci. So let's also grab a Fibonacci, grab it from the most recent swing low, bring it up to the most recent swing high, and let's pay attention to which levels coincide with, this is sort of that sweet spot. So for me, the most likely kind of area where I would expect a little bit of a turnaround is going to be in this area here. Okay, so I'm going to remove this now because I don't need that just yet, and that actually highlights where I would expect this to come back from. So this, oops, let's bring that up to those highs there. That is really what I'm looking for. Will we see a turnaround in this area? And will we then, and it would be in the next couple of candles. So these are the areas where I'd be looking for that. And I'll be doing it with you in real time. In other words, when I see a nice bullish candle there, and I'm satisfied that we're possibly going to see a turnaround, I will be the one that I'll kind of highlight that and look at it. Netflix. Again, just expecting Netflix to come back down towards these lows. Over here, we've got PayPal, which has just managed to break out and is going to take another knock. Still can't quite, it's managed to get out of the range here, but let's see if it can stay out of that, out of the range. Spotify also is definitely going to be taking a bit of a breather. I expect this to come back down to 300 at the very least. That makes a lot of sense. We could see a deeper correction back down to this. Let's adjust this because actually that is where it's much more likely to be. And just bring this in a little bit. It's very dramatic. There we go. So that's a possible area where we can sort of see that pull back to. We've got Spider, again, just to pull back lower. So again, kind of a little bit boring to me because all that's happening right now is we're seeing a correction back down towards the 50-period moving average, potentially on the weekly. Tesla, that strong rejection there as well. We still have no longer-term picture here. In fact, there's a fair possibility that longer-term we're going to see this breakout and head down here and then obviously down towards 100. Would it break below into single digits? We're going to have to see how that goes. We'll see. So it is stuck between, there's no real longer term clarity here. It's just ping-ponging between those. And it's certainly going to take some pressure when the rest of the market does as well. We've got Vanguard here coming up under that really strong double top there. So for me, the way I see that is just a couple of bearish candles here on the monthly, or possibly even a really nice big red one here, and then October might show some green. Walt Disney, we'll see that head back down to the bottom of the lows there, of course, as well. So this is similar. It's got that nice bullish divergence, but it's not there yet. It's not turning on. Moving on to bonds. Bonds, of course, I've spoken about recently. They are starting to look very nice and bullish. We got our breakout this week. So we had a nice little bullish breakout pattern. We spoke about that. We got that breakout. Let's see if it continues to the upside. And what is different about this, ladies and gentlemen, is that bonds have not really been this bullish. So if we go to the weekly candle here, the last time they were really this bullish was kind of around about 2018, December 2018. They moved up and then they started to turn bearish around 2021, and now they're starting to look bullish again. So this is quite nice and significant. I think bond traders or technical traders should definitely be giving this a look. Eurobond as well, starting to break out to the upside. So I am liking the look of quite a few of these. This is a very nice bullish engulfing candle here. So it makes sense to me that we would see this continue to move higher on that. Okay. Let's have a look at crypto. So what's going to happen with cryptos? Cryptos, ladies and gentlemen, will come up under quite a bit of pressure. They'll certainly be breaking a little bit lower here. This looks nice and bearish, but again, this area is where I think we could find some stability and see a turnaround. Let's have a look at Ethereum in comparison, back down towards these highs, these previous highs here, but back down towards these lows. Makes a lot of sense to me. This we can remove. We now know that we're not going to see that anytime soon. And so we'll see how the week plays out. But for the most part, I expect these to come under heavy pressure. But again, I say this because I see them more as a tech stock or a variant or a derivative of tech stocks. Okay, it's not really replacing any currencies just yet. It's being used in that way as a sort of a token thing, and there's a lot of huge crime-related anti-money laundering or money laundering, bad, negative reputation stuff associated with cryptos. So there's a large part of the population, significant enough that it's not quite buying into it just yet, and they're coming under equal pressure. Okay, and so I'm going to leave you with that. My expectation is this week it's reasonable to expect the markets are going to come under continued pressure between now and October, and we're going to be looking to see how far they drop, and they should be hitting those sweet spots on the monthly charts. It's really the chart to watch now is the monthly that gives you where your key levels are most likely to show themselves. But the question for me is, do we get a stronger dollar this week? Because what's interesting here, a stronger dollar often obviously is a part of a falling market. It is at the bottom of a range, but at the same time, there's talk of rate cuts, and therefore we could get that weaker dollar. So technically, I want to see this week if we get that stronger dollar. I'll be looking at the highs and lows of the weekly candles on whichever key chart you really want to see how it plays out. Let's look at the high and low, breaking the highs or lows of last week's range. And there we go. I'll leave you with that. Thank you very much. Trade carefully, keep calm, and carry on.